I started out trading in 2012. Um, Dan Sheridan is a CBOE market maker. I learned options and the advanced options, how to look at the option Greeks and everything from him. And I learned something called as calendars, diagonals, triangles, all of those from him, and started using options for income. I had learned technical analysis before, so I combined the two, and that's how I trade. Um, that's just about me. And now, after this, I have been working with Laduk Trading. I am a contributor and I run a Slack channel for her. I also have my own Twitter trade alerts where whatever trades I do can be copied. Everything is for educational purposes. Even today's session is that. So I have thought about risk a lot because it's very easy to, right, say that, oh, you can put a little bit of money and trading means you can make a lot. But people don't talk about the other side of it is that you can lose also, right? So how much do you want to risk is very important for me. And options is a very, very important aspect of that. So I use a lot of butterflies and calendars and diagonals as a way to not only trade, have income, have profits, and increase my account size, but also as risk management tool. So if you guys have anything for me to analyze, but I would rather use my, um, to come up with a trade. So it's not only analyze the chart for you guys and come up with the trade too. How do you like that? Do you like that part? So let's go ahead. You're talking about the first one is PRDO. I don't know what this is at all. Okay. So the first thing that I'm looking at it, okay, this was a big, okay, on earnings. This was on earnings that it gap went higher, which means, okay, it gapped up on earnings. It has been coming down. As long as it is above this, it should be bullish. But it has taken out more than 50% of this candle, right? 50% of this candle it has already taken out. So it is bearish according to me because it couldn't find any support. There were no buyers. So now I am waiting for this to get undercut and find some support here. Okay, so something like this is the 1925. If you do 1935, this is not only the 200-day moving average, right? It's the 200-day moving average, which is pointing upwards. It would be, right? It would not fill the gap. So it would still be bullish, but it would undercut this, get everybody who gapped up over here, bought here, right? Get them out, right? Somebody would panic, undercut, and then find a bounce. So now I look at this, okay, is just 20, IV is only 20. So let's go ahead and not only analyze, let's look at it. Okay, there are only monthly over here available. So 4 days makes no sense. So if you're waiting for a bounce, so there is no trade for now. If you still want to trade, do you want to buy here? You know anything about it? I don't. So I'm not selling puts. Okay, I don't know anything about this stock, so I'm not selling puts. So even if and there's no volume here. There's no volume here. If I see nobody's trading this. So for me, this is a pass. The best thing that I can do is wait for it to bounce here. If it bounces here, that's when I buy. Otherwise, for now, it's no go in terms of going higher. Now, Tesla, I already have a position. I can explain that too. Okay. So let's go through Tesla first. So all this time it has been getting tight, right? If you look at Tesla, this was the 200-day moving average, which was pointing downwards. So it kept restricting the price. Whenever it would gap up, it kept restricting the price, and it kept coming down. All this, and then this was the day when, it was higher, but then next day, Elon Musk pay package and all that stuff. So I'm like, okay, it's still, look at the 200-day, it was still pointing downwards. So what I did, okay, over here, it's here, this is where it always gets rejected, right? 190, 200 levels. First day when it came, it got sold. So now I'm like, yeah, it can go higher. But has Tesla been one that goes higher recently? No. So I could do two things, right? I could just, you can see I have a position. I could just buy a call for this week, right? That was last week when that Elon Musk vote was pre-market and it gapped up, right? I could have just bought calls. And if you had just bought calls, you are underwater. Why? Because it gapped down. But what I did was the kind of trade that I took. This is my live account. You can see I have the trade there. So I'm looking over here, okay? This is where, what is the high of this? This high is 198.87, okay? Okay, so I'm getting alerts for many, okay? And then if you look at it over here, this closed at 203.46, right? And then next day it gapped down at 199. So this is a gap that it needs to fill. This is a gap. This is where it came, got rejected. So I don't think it goes beyond 200, right? That's my first tell. I don't think, even if it starts moving crazy, I don't think it fills this gap in one go right now. I don't think it does there. So then next I go ahead and look at my volume profile stuff, and I'm looking over here. Okay. So if you look at it, there is this small gap here. Okay. It came here. There is a small gap here again. So I'm like, okay, it can do this. Options expiration, it can start going higher. And this is where it pins. It can come to this place. So I bought a 187.50. No, it's a 185, sorry. I have a 185, 192.50, 200 call butterfly for this week. Let me tell you how much I paid for it. I'm just running it and telling you if I don't remember. Okay, order history. It should be there. Give me a minute. I did not pay more than 50, 70 cents. I don't pay butterflies. For me, butterflies are not more than $1.50. Okay. So, and right now, that contract over here, okay, I'm up. Where is it? This is a lot of things. I'm up $136 on it, right? Let me see. How much did I buy it for? Okay. 70, no, not 70 cents. 1 minute. Oh yeah, I bought it for 66 cents. Okay, so I bought this for 66 cents. And now if it pins at this 192.50 on Friday, which it seems like, right? I would make $7 out, $7.50 is the width of the butterfly. So this is a $7.50 debit spread, and this is a $7.50 credit spread. If it pins at this 192.50 this Friday, okay, my $66 will become $750. Okay. And you subtract that, so my profit is going to be $6.84, right? $684. So my $66 becomes $684. So this is the butterfly trade that I do more often. Why did I do that trade? Because Tesla has been pretty unreliable in terms of how it moves. So if I buy a call, I'm paying $5, which means I'm buying $500, and I don't know whether it's going to work. Even though the chart looked okay, it had not been doing that, right? So that is one part of risk management. Just do a call. Tesla moving, it can move 10, $5, $6 if it wants to in one day, in maybe 1 hour, maybe even in 115 minutes. If it wants, it can do that. So if it goes against you, you can lose the entire, 50% of your, say your risk management is buy calls in July, and have a 35 or 45%, right? 35 or 45% of stop. One down day, this itself gets you out. You're down and you're out. So this is me. Okay, this becomes I don't mind buying that, and I don't mind losing $66 on one contract. If it goes there, fine. If not, it was a trade that I did, which, lost money. So that is a butterfly trade in Tesla. Now let's look at where it can go. So 200, the moment it gets beyond 192.50, because now it's part in my credit spread area, I'll just get out. I would be able to, I'm not going to be greedy. If my $66 becomes $350, I'm out. It's still a good trade, right? So that's what I would do with Tesla. This gap, the moment it fills this gap and goes over, I'll get out of my butterfly. But let's analyze this entirely. This on the daily, it looks good, but on the weekly also, it looks good, because now the 8-week is about to cross above the mid Bollinger Band. So this is a bullish thing, okay? Closing close to this, you're talking about it getting to this 201. This becomes your 200-day confluence with your 100. This is your 200 week. This is your 100 week. All of them plus the Bollinger Band. So 203, 205 seems to be a big resistance for now. Okay. And let's see, does it have the power to go? It's definitely squeezing. I am looking at it, how it closes this quarter. Now that we are getting close to the quarter, let's not only look at the month, let's look at the quarter, right? Next week, we end the quarter. Now, if I look at it, if we close anywhere above 195, right? It would be a hammer candle on the quarter, which would say that next quarter, right? We could go to this 250 if it wants to fill this part, right? So I am looking at it definitely from that point of view, that next month, next quarter, we could have this kind of rotation, because Tesla has done nothing. On the monthly, it has a TTM squeeze. On the daily, it has a squeeze. So this can get going, okay? So, but this gap first, and, maybe wait for a little bit of consolidation and then go higher to test this. So I'm bullish Tesla. And now that I know that it is working, right? Now I have a call. Last week, when this news came in, Before that, right? So many times, think about it. Okay. We would have this 1 day move, then the next day it would gap down and crap out. If we would have a big day, it would crap out. Again, you would think, oh, it's about to break out and about to squeeze up. Again, it would break down. So initially, we don't know right now. So that's the reason when this news came in and it got sold off, I chose to do a butterfly, not buy a call, because I did not know what it was going to do. Now that it has given me confirmation, now that the mid Bollinger Band is, which is the 21 EMA, is crossing above this, which is the 100 EMA, right? So now we have a bullish cross. We have this kind of a day that Tesla is giving when nobody expected anything from it, right? And now it's going higher. So now I have a call, which is a 195 call for July 5th. Okay. Now what would I do? How do I manage risk? 192.50 calls I bought 195 calls. Okay. Now let's say next week I am expecting a pullback in the market, which means 80% of the stocks go down along with the market. So if I have to think, it comes here, pulls back again, then goes higher, right? So what do I do to this pullback? Do I keep, seeing my loss, right? My profit turn into a loss, or my 100% profit being only 50% profit? No. That's the reason I bought July 5th and July monthlies, right? I think July monthly is 19th, right? I bought one for July 5th and I bought one for July 4th, 19th. Okay. So this is what I bought, 192.50 for July 5th. I bought 195 for July 19th. What would I do? The moment it gets here and I see on an hourly that it is not able to break through, I'm going to sell something against this. I will sell 28th, right? I will sell 28th June, 192.50 or 195 call to make it a calendar or a diagram, right? Now that Tesla has given this kind of a candle, the IV is increasing. Now that the IV is increasing, I will get more premium. So let's go through this, what can be done, okay? So this, okay? So I bought 192.50, which is over here. Let's say this is a new trade, okay? I have it in my other account. So let's say I buy it for $5.70. Right now it's at 187.50. Okay. Now suppose it goes to 192.50. $5 more, which means what is it's going to be? It's going to be trading close to $7.80. Okay. So I have a profit, but I think it will keep going higher. So what I can do, but I don't know whether we get, suppose I'm expecting some pullback, right? It has run up so much. So I will sell for June 20. I can sell a 192.50 or a 195 for $3.10. So I bought for 570. It goes up. I got, it is 780. Now, if I have, say, 10 contracts, okay? How to risk manage? If I have 10 contracts, I'm out of 5 contracts. Okay, taking this profit. $2.10 profit out. 5 contracts. Okay, so let's do some math. 7. Okay, I'll just round it to 6. Okay, and I'll round this to 8 to make the math easy. Okay, so I paid 6, 10 contracts. Okay, so I've paid 60 times 10, right? Times 100 that we have. So $6,000 I've put in Tesla. Now, if I take 5 contracts and I'm out, took my profit. So that's 2 times 10, which is 20 times. So 2,000 out, right? I have taken 2,000 profit out. Now my cost base is only 4,000. Next up, I take 2 contracts and convert this to a debit spread. Okay. Debit spread means I'm just selling the 200 against it. That is one way to do it. Okay. I sell that. So if this has become $8, right? $5 up. So I have to see what would be this 195, which is $4.80, right? So now the 2 call debit spreads that I have, how do I do? I'm selling $4.80 against it, against what I bought for what I bought for $6. So now I have only $1.20 left, right? I've sold something. So now I got 2,000 out of the 6,000 already out. I am selling another 2 for, I'm rounding it to 5, right? So 5 times 2, right? Another 1,000 out, which means now I have risk of only 1,000 left, right? I took 2,000 profit, but I got the 5 contracts that I paid, right? That is also out. So 5 times 6, 3,000. Right now, I'm out of everything. Now my trades are free. Okay. My trades are free. I have 2 call debit spreads left. I have 3 calls left. Right? And they're free. They are free. Free in the sense, whatever money I put in, I'm already out. And now I have 3 calls, 2 call debit spreads left. Once this, if it goes further, right? This 190 to 50 calls that I have for 5th July, these 3 calls, if it keeps going higher, and I think it can keep going higher, I can sell something against it. This is like owning a stock, right? When you buy calls, it is like owning a stock. But that, and then I can, even if I see it's going to go there, just sell a 200 call for 28th June, 5th July, 12th July for my 19th July call, right? I can keep selling calls against it and then convert to a call debit spread, keep taking profits and still have. That's one way to do it. Another way to do it is once it goes there, then you roll up. So then 190 to 50, 10 contracts, I just sell the whole thing. I started with $6,000, sell the whole thing, right? I have 8 times, sell everything. And now instead of doing the 190 to 50, I can do a $200, right? Go to 5th July, do a $200 call. So different ways you can roll up for risk management. You can convert it to a call debit spread for risk management. You can sell a near dated call to make it a calendar or a diagonal and manage your risk. Okay, that's one. Now, this is how I'm going to manage my Tesla. Okay, Tesla, I am bullish as long as we are above this 177. As long as we are above 177, I'm looking to buy Tesla. Let's look at SPX. I'll do it with SPY. So let's go ahead and look at it in terms of Okay, so last week's high. Okay, last week's high, we went outside the Bollinger Band, consolidated for 2 days, and now we are having this breakout, right? Now, if I look at it and I put this expected move, okay, I'm getting alert for snow higher. Okay, so if you look at it, all these days, the expected move on SPY is actually over here at 549. So we are still within the expected move for this week, but we had 1, 2, 3 weeks, right? If I just do the weekly, if you look at it, okay, we were outside the expected move, inside the expected move. Mostly during options expiration, we get close to the higher. But if you look at it, mostly every time, okay, if we test the upper range, we come back and try to test the lower range too. Expected move, lower range came towards the upper range. We came to the over, right? We are always mostly within the expected move. So this is what I'm expecting going to Tuesday. Fine, because we have VIX expiration tomorrow. So after tomorrow morning, I'm expecting some kind of pullback, okay, to test this range again, because we are getting close to 5,500. It's a round number, okay? If we look at it over here, right, in terms of all this, 550, 549, it's only 20 cents. This is 0 DT. Let's look for 21st June, which is the expiration, right? Taking out 550 this week is going to be difficult, okay? Because this is the highest gamma, this is the highest open interest, this is the highest place where even volume is being traded today, 550. Now, if we have to pull back, if you look at it, the next gamma is at 543. Okay, 543 is the next gamma level on the put side. So let's look at it in that regard. 543 will be just testing last week's high. And that's not out of the ordinary, okay? Let's go ahead and look at it in terms of the pullback that it can do, okay? So this gap, so if I look at the expected move for this week, just this gap is the expected move, okay? We had around $64 on SPX, which means around 6.5 from, right? So we had almost $5.20 done today itself, maybe a dollar more, which gets you to that 549 level, right? And then we can come back, pull back here to this 541, test this, or come and fill this gap. So this is what I'm expecting. 540, no, 543 makes sense, which would be 5450, okay, for this Friday. We could either pin at 5450 or 5,500 for this week. So again, let's come up with this trade, right? So we are already at 5488. Tomorrow, we test, if we are going higher, we test 5,500 or 5,525. And then when I see it pulled back, then, right, once it gets there, maybe I think, okay, it can come back a little bit, right? Let's just take a fib over here. Now you can see that I am showing that we have that JPM collar. You remember, JPM is, okay, JPM collar is the JP Morgan collar that we have, 55.65 for this quarter. Getting to 55.25 is what I think we can do. Okay, 65 is too far out for this quarter. So that part I'm not expecting. But let's say, okay, this gap up holds. Let's do a fib on this smaller time frame. Okay, we go from here to the high, come back down, right? And let's take a 2.618 restrict. You can see what's the extension? Exactly 5,499, right? In even this small time frame. Okay, so if this small time frame is going to have 5,500 also as a thing, now let's say that is going to be, I'll put that as my high, okay? And if that is going to be my high, from there, where can it pull back to, okay? So from here, I'm going to see where can it pull back to. And if it matches with with the options, right? So if this is the high, now you look at it, 38.2 comes to this 54.62. Okay, so 54.62, we can pull back on Thursday over there and then come back to 5,500. Possible? So let's see what would it be. So over here, in terms of, no, the gamma goes here. So if I think for 54.65 is going to be the pin for Thursday, okay, I can do a 54.90, 54.65, and 54.50, 15 point. You're paying $6 for it. That's quite a bit, right? So instead of that, I will just go with XSP, right? XSP is 1/10 the size and it's a cash settled one. So it would be 545, 546, and 549, right? 15, no, that's the reason that's the reason this is not proper. 15 is 80, not this. Okay, I'm like, what happened? So this is $1.60. Okay, so you're going to do an SPX butterfly if you think that once we reach to that 5,500, it pulls back and comes back close to this 54.65 on Thursday. This is that kind of pullback we have. Right now it is $1.60, but once we go to 5,500, this would be less than $1. Okay, less than $1 I would pay for it to come and pull back down there. So let's go ahead and try and analyze what happens. Okay. I will put a trade. I'll do add a simulated trade. Okay, simulated trade for Friday, for Thursday, sorry. And I'm going to be buying this butterfly 56.80, 56.50. Okay. And I'm going to just analyze this trade right now. So it would look like this. Okay, it would look like this. If the pin is over here, it will be, now let's see what would be the cost. We can see what would be the cost, right? We are going on 620 and we can put what was the stock, what is the stock price? Let's say we go to 54.55, right? If we come to 54.55 on 620, your $1 trade is now $356. So you would, so, but think about it, okay? It's not only whether I am right in my analysis, any trade you put in, first you have to analyze your chart, right? Analyze your chart. Be right in your analysis because the stock does what you thought it's going to do. Stock moves in your direction, right? How much money can you make? How much money can you lose? All those criteria are there. Now I am expecting a pullback. But if I think it's going to pull back and I buy just a put, you're talking about spending for one contract. I am talking about $1,000, right? For one contract for 54.65 puts. The speed at which it moves, SPX, if it doesn't go there, you're losing $1,000. Now, based on my analysis, okay, smaller time frame, it is reaching 5,500 is the target. It's a big round number, which can, with options, you can see over here, that's where the maximum amount of calls are there. It gets restricted there. I don't think it goes further than that. All those things make you, yes, we can go back down there. It's going to be what? Nothing different. You're looking at it on a 30-minute, the RSI, everything is overbought. And even with your, it has gone here, comes back down. It can go back up again to this 55.25. So I'm just expecting this small move. And for that, I am not spending $1,000. I am spending only $100. So this is the kind of a trade I would put, and which I plan to do that kind of a trade. Anything else? Any other thing that you guys want me to see? Or any trade that you want me to come up with? Another one that I'm looking at is Amazon. Now think about it, okay? The Meta has run in terms of Mag 7. Apple ran up now. Microsoft ran up. Google is already close to its highs. Amazon and Tesla have not done, right? Now, same thing. Amazon is also getting tight. Tesla has started moving. So the easiest trade is to go to XLY because they are part of consumer discretionary. XLY and XLK, Amazon and Tesla are both part of XLY, and it is having a big move. So if you, right, you could have a call debit spread in Tesla and a call in XLY, which takes care of the Amazon move also and Tesla move also. Or you can have calls in Tesla because that has already started moving. Do a call debit spread in XLY that takes care of the day when you have Amazon moving but not Tesla, right? For July expiration. And it's an ETF, no earnings or anything that you have to worry about. Okay. And then once you see Amazon moving, then you get into the calls in Amazon. Right? So you don't have to time it perfectly. Now, XLY, okay? So another thing that I'm looking at is IYT has been, right? IYT transports, it has been in the dumps. Okay. It has been in the dumps over here, transports. If you look at the weekly, okay, this is the 55-week Bollinger Band. If I look at it in terms of here, how it closes this week will determine whether this is right here. If I take this, I'm just waiting for it to come to this 61.81 and see what it does. So I am just looking if I'm going to get a bounce in any of these names. XLE has reached this 55 week. It is getting closer to the 61.8 retracement. So I'm just paying attention if there is any rotation possible. As of now, no signs of any rotation. It's semis and it is semis and all these names. Now SMCI. SMCI is going, if you look at it, SMCI, this wedge, right? It is breaking out. Now again, NVIDIA has been going higher. SMCI is there. Now, again, they're all $200, 200% up, right? It goes to 950 this week. Very easily possible. This is the 969. Can it go? It's just first day, Monday. Can I have another 2 days, 3 days to this Friday to get to this 1,000? Possible. What about it next week? Possible, right? So again, now you could do this. If you wanted to do 950, 970, called debit spread, right? You're paying 950, 980, you're paying $625 for one contract, right? You could easily do, you think it gets to 1,000, you can do next week. If you think it goes to 1,000, maybe it takes time, but as not this week, at least next week it can go to it. You can see I have a butterfly there. I have a butterfly here. I am thinking it goes to, it gets close to 985 this week. And I think it gets to this 1020 next week. So I have posted butterflies there. I have my butterflies here. So you want to know next week's butterfly pinning at 1,000, I took it for 70 cents. That means I put $70 in it. Okay. Not this. Even if SMCI, the way it moves on a 3-minute, okay, on a 3-minute chart, if you look at it, you bought it for say $2,000 or whatever. This 3-minute chart from 921 to this 913, you've lost 50% of whatever you bought, right? You've lost 50% of whatever you did. Whereas I have just, okay, yeah, I know everybody is targeting either 950 or this 1,000. Let it come there. I've paid only $70 for it. So butterflies are my thing. If you want to make it such that you, right, have a bigger debit spread, you can do a 950, right? You can do a 950, 1,000, 1,020, right? So this is a $50 debit spread on this side and a $20 credit spread on this side. So then you're making, this becomes broken wing because this side is heavier than this side, and you can make, and then if you did that kind of a trade, it won't be $70, okay? It would be a different. So let's go ahead and try what it would be. So if you think it goes to 950, 1,000, 1,020, you're paying $7 for it, okay? But now you don't have to wait for it to get to 1,000 because 950 is closer to the money, right? 950, we're almost, 950 is here, which is 35 delta. So you just need it to get to 957. If you're paying $7 debit, right? Your break even is 950, which is your start of the trade, right? That is where you start your long. $7 you paid, so your break even is 957. You just need it to get to 957 for it to be profitable. But I did a 975, 1,000, 1,000, $25 for 50 cents. For me to make money, it has to get to on Friday. Okay, right now, it has started moving. I'm already profitable. I'm already almost 200% up. Okay, I can sell this for $200 right now. So, but the break-even cost on Friday, on the day of expiration, it has to be $975.50 for me to make money, right? So that is, so again, how much do you want to spend? How much do you want to spend? How confident are you of your analysis is one part, but how much are you willing to spend? Now think about it. If I'm already long Apple, right? I'm already long Apple. I am long Tesla. Now I want to do a third trade, which is SMCI, because it's breaking out. Yes, you can buy, depending on your account size, depending on your risk profile, how much you're willing to risk. For me, after having 3, 4, 5 longs, I'm not taking the sixth trade, going to be another call, right? Now I am looking for ways to manage my risk. It may be so that the SMCI setup is better than Tesla's, but now I'm already long Tesla. I've already put my money down there. It has not taken out my stop. I already am long Apple. I'm already long Netflix. One more? How many more? Right? How many more calls are you going to buy? And that's where that fear of missing out, people keep buying multiple calls. And then you have one pullback, all of them come down. So instead of having a fear of missing out, I'm just doing a butterfly. $50, $100, I'm willing to lose because I'm already making money in my Tesla. I'm already making money in my Apple, right? But now I don't have fear of missing out on this. And I'm not risking a lot. Okay. So those are the kind of trades that I learned, I've done. If you guys want to learn any of that, and I have my own Twitter trade alerts. I do options mentoring. You can go to Archna Trades you can go to archnatrades.com and put women 20 to get 20% off. I'm still here. If you have any other thing to do, any other analysis, any other trade that you want me to come up with, I can. Like Netflix, probably going to 700, right? Netflix probably going to 700. Why do I think it probably goes to 700? Let's look at the weekly chart here. So over here, why it has slowed down, right? Since morning, it has slowed down here. If you look at it, it has slowed down here at the 680, 682 level. Why? Because this is where we are looking at it. If you look at the weekly chart, the 700 was high, but over here, this was a spinning top. The next day it came down the next day. So this is where it's going to find it difficult to break through. But once it breaks through this 685, it can go to 700, right? Now, does it happen this week or next week is to be seen, but Netflix easily gets to the 700. Okay. And let's LSTR. Okay. I don't know. What is this? Landstars. Let me just see what, okay, it's in industrials. Okay, just wanted to just see where, okay. I've never seen this chart, so just give me a minute. Okay, this is right at the So this is the yearly point of control. This is the monthly point of control. It just got above that. 183 to 186 is possible if it tends to go. Now let's go ahead and see. Okay, it had for this week, it had this open interest. That's already in the money. This has already become zero. No bid. It still has this. I don't think that happens. Just let me. Nobody's trading this. Okay. With nobody trading this, it's going to be difficult. When it's this kind of thing, I don't do calls right away. I would, even if I did, I would go way far out in time. Okay. What's the ID? 17. It doesn't have, when is its earnings? 7/24. That means you go to August. Is there August? There's no August. So even if you go here, you're not going to be able to go to this. What about October? It's too expensive. Let's see. I was saying it can go to easily this 186, 187. So calendar doesn't work. Too expensive. No. No, the easiest trade this is for it to come to this 185 level, 180, 190 level is just do a debit spread. There's nothing else to do here, but it's too wide. This is not an options trade. I'm sorry. I wouldn't do any options trade in this. It's too illiquid. The bid ask spread is, oh, this is like 245 by 310. Nobody is trading this. It's not only how, when you get in, how do you get out? There's no way to get out. No, I'm not trading this. I'm not trading this. I'm sorry. Anything else? Okay, if not, then I'm done. Hopefully you guys saw that risk management does not necessarily have to be expensive, and making money does not need a lot of money in if you know strategies like butterflies. Okay.